Welcome to the City Current Show. I'm your host, Jeremy Park. We're always honored to bring you inspiring stories of individuals and organizations making a difference and powering the good. And we also love making sure that you and your business are well protected. We're talking about cyber risk insurance, and we're honored to be joined by Gray Holden. He's a managing director and specialty practice leader with Higginbotham. Gray, how are you doing?
I'm doing wonderfully well. Thank you.
So let's start with a little background on Higginbotham. And so when you talk about the footprint, the specialization, give us a snapshot on Higginbotham.
Certainly. So it's changed quite dramatically even in the last 5 years. When I first joined in 2017, we were the first office outside of the state of Texas. And today we are 66 office locations in 14 states across predominantly if you think of the old Big 12 and SEC conference from a football perspective, that's our majority of our footprint. And then we have a number of colleagues in the Southern California market as well.
So when you think about Tennessee, Texas, Florida, California, everything in between, like you said, a growing footprint indeed. And when you look at the specialization, property and casualty, so P&C, employee benefits, personal lines, home and auto, but a lot of specialization. You hear day two services, but in your world, it's all around cyber risk management. So give us a little bit of a vantage point for your specialization.
Absolutely. So my specialty practice involves management liability and cyber risk. That includes coverages as far to one spectrum as directors and officers and errors and omissions type coverage, employment practices liability. And probably the newest, hottest topic on the market today is the cyber risk and how we're risk transferring that from an insurance perspective. Talk
about how it starts on your end.
Certainly. So the key change that we've seen in the last 24 months in this particular market has been the stricter underwriting terms and conditions. And so, underwriters are actually hiring IT people now to underwrite this risk as opposed to how it used to be done, where insurance professionals were trying to understand the IT risk and then price for it. And that, along with the culmination of what's happened in the marketplace and increasing loss ratios and increasing loss activity, have really created a tightened market in the overall space. And so from both a coverage terms and conditions as well as a pricing perspective, it's led the underwriters to be much more strict in their underwriting review.
Give us an idea of how bad it is. When you look at some of the stats, the numbers, why does this matter so much for businesses?
Sure. So last year, the average rate increase was running somewhere between 60 to 100%. This past trailing 12 months, we're still seeing it at a high level, so somewhere around the 60% range. Fortunately, we are seeing some softening in that pricing pressure for companies that have implemented the proper controls. Unfortunately, for companies who haven't implemented those controls, in many cases, we can't even find the coverage, much less at an affordable rate.
So when you're talking about cyber risk management, risk liability, cyber liability, these sort of words, what does that mean? Because I'm thinking, ransomware, spear phishing, like define the world that you're in terms of what this liability entails.
Absolutely. And two main parts of it. We've got a first party exposure, which would be the ransomware events, the business interruption that can be caused by hackers getting into the system and debilitating it. And then we also have the third party risk, which is loss of data. The trend prior to 24 months ago really was focused on the loss of data, breach notifications, protecting people's loss of identity, and those types of things. In the last 24 months, it's slid very much to the other side of the scale, where now we're having business interruption affect our longevity and ability to conduct business within our clients. And so the focus from a controls perspective has really been honed in on those two particular areas, being the phishing attacks that you mentioned, which are letting people in through our email systems in most cases, and then also the simple ransomware impact from stopping a business.
I know that the carriers, the insurance companies themselves, when they're doing their due diligence, they look at a lot of things to get just an idea of where you're at currently. but then even then they'll try to kind of attack you too to test, right? And so talk about kind of how it works and the ongoing piece of this where it's like everybody's out to get you and make sure that you're protected.
Certainly. So as I mentioned a little earlier, the underwriters definitely have gotten more sophisticated in how they underwrite this business, and many of them have started using artificial intelligence. We consider them the fintech type insurers, and there's some positives that come out of that though, because while they do some external penetration testing, it's not as deep as one might see with a consultant that they hire in to come in behind the firewall and really test the vulnerabilities of the systems. Those services are available, sometimes from the underwriting companies, most of the time from third-party consultants, but on the front end, they're pinging the publicly available information, trying to find vulnerabilities. And if they see those vulnerabilities, it creates a lower underwriting score. And if the underwriting score is too far below the industry averages, then that's going to have an impact on either their pricing or their ability to get coverage. And so definitely seeing more and more activity in that space. The other key thing that they're really looking at, and this is specifically targeting the ransomware events, are multi-factor authentication across all systems, not just external network connections, and then endpoint detection and response, dealing with if we identify somebody's in the system, what do we do with it, right? Those two key things, if we don't have the proper exposure management with regards to any individual client, it's very difficult, or it makes it significantly more challenging for us to get an attractive program in place to transfer that risk through an insurance product.
What sort of business, and I already know the answer to this, but what sort of business needs to be paying attention to this sort of coverage?
Every business. If you operate on a computer, this is a risk.
And I think that's where this is becoming, you look back maybe 10, 15 years ago, it was a part of the conversation, but now this is a major piece of the conversation and a major piece of day-to-day kind of operations that goes into protecting the organization. And I just think it's becoming, that much more top of mind, that much more important every single day with every move we make as we become more connected, more digitally focused. Mm-hmm. So give us an illustration of kind of how this works in your world in terms of, sitting down, finding the right coverage, but then ultimately making sure that they're protected. And then if something does happen, what to then do about it.
Sure. So our first steps are going to involve, completing a supplemental and an application. The applications 2 years ago were, 3 or 4 pages long. We could get indications. Today, they're multiple pages. And then we've got supplementals asking about some of the things that we talked about earlier. We prefer to review those responses with the client before we go to market, because we found if we go into the market with bad information, incorrect information, or we don't have the proper controls in place, once the market sees that, it's very hard to change the course, even if we're in the process and have agreement at the client level to implement some of those risk management controls. It's more difficult to change the underwriter's mind once they've seen a poor application, if you will. So we try to work on the front end to identify the potential risks of any given application, talk with the client about what's feasible to implement or not. A lot of times that's a financial discussion, but many times it also includes operational issues. If for some reason, for example, we don't have a need to implement multi-factor authentication across the entire organization, we want to identify why and explain that on the front end. Once we have all of that information, we go to market, we design the program, we present the options to the client and implement the risk transfer element of the program. Our recommendation at that point is to use our tools as well as the underwriting community tools from a risk management perspective, both to continue the management of the exposure on a day-to-day basis, but also, as you said, look at an exercise, if you will. What do we do in the event of a crisis, and how do we respond to that? Many of our clients are doing tabletop exercises with their executive teams, identifying once we've seen a potential incident, what do we do? Here are the key phone calls that need to be made, including us as their broker and the insurance company, of course, in that list, and then going on down through the steps, just as you would and a normal weather disaster planning type exercise.
One of the key things is before you pay a ransom, or just jump in to start making decisions, to your point, reach out to the team, engage you in the conversation early on, right at the beginning. So that way it's a team approach, correct?
Absolutely. And in fact, more and more what we're seeing with the proper risk management controls, we have the proper backups, the proper redundancies where our forensic analysts on the claim side can get into the system, understand what was breached, how it was breached, and when it was breached, potentially locking out the old system, rebooting with a proper backup that's not infected, and getting the company back online faster than actually paying a ransom. Quite frankly, on a long term, I would expect to see more and more push for that from the marketplace, and even from a political perspective. There's been discussions around whether or not payment of ransom in this type of a situation is appropriate. And so I don't think that issue is going to go away. And the more risk management we can put around it, the better defenses we're going to have.
You mentioned tools on both sides, both the carrier side and also obviously the Higginbotham side. Dive into the tools.
So from an underwriting company perspective, many of these companies have started creating platforms that will allow an insured to open their connectors through AWS systems or Google security type systems that will allow the insurance company to help monitor on a periodic basis and provide dashboard reports to our IT professionals inside of our client organizations. That to me has been an extremely valuable tool for our smaller middle market customers who may not have as broad of an IT resource team at hand as some of our larger customers. From the insurance brokerage side, we've got a couple of main tools that we use. One that we get asked a lot of times is, how much insurance do I buy? And we've got modeling and some additional data points that gather subscription data from across the industry, both on the insurance placement side as well as the potential loss activity side, that essentially can run Monte Carlo simulations on the demographics of any individual client or prospect and help us determine what their maximum potential exposure would be, allowing us then to back into an equation of what's a reasonable amount of insurance at an affordable rate to protect your business.
What's one or two things that you wish everyone knew? Because obviously we're talking about a very complex subject that changes on a regular basis, but what's one or two things that you wish every business owner knew when it comes to cyber liability?
Well, I think, the first one is becoming more and more realized, in that it's, cyber's here to stay, or the cyber risk is here to stay and probably will continue to grow. The second is, this type of insurance is not something we just fill out an application and go get many quotes for, like we would a homeowner's policy or possibly even a small, business commercial policy. There's a lot of underwriting that goes into this, and having the proper controls in place before we go to market has proven to get us much better results. And then the third key thing is, understanding the balance and leveling between the spend on the risk management side on the front end, recognizing that that's going to create some savings on the back end, as well as protect the business from a business interruption potential loss.
Is there a lot of capacity when you look at the marketplace? Do you see more insurance companies, the carrier side, do you see more of them stepping in and there being more competition? Like, what are you seeing kind of in the landscape of capacity out there when it comes to the insurance coverage?
Yeah, that's a great question. So about 12 months ago, we started seeing a restriction in capacity. And in the last 4 to 6 months, we've started seeing some new capacity enter into the marketplace. I don't know that we've replaced all of the capacity that was gone, and certainly the underwriting restrictions are, taking willing capacity out of the market. But we certainly have more new entrants. They're being more focused in their underwriting, and if our clients meet those particular underwriting requirements, are able to get more competitive rates and programs, which overall drives the better competitive marketplace.
What puts a smile on your face when you look at where we're headed with this, the opportunities that are there, what it means to protect the businesses?
Sure. I think the evolution that I've seen in the last 6 to 8 months is really a better understanding at the corporate level, as well as the IT professional level, on the fact that simply buying insurance for this is not the solution. We've got to have, the proper risk management on the front end, and engaging the IT professionals in hand with the insurance community has created some more resources for our clients to better understand what we need to do. I think there was probably an element in the last year or so of people looking at it and saying, what do we do? What else? We think we have all of the responsiveness that we can have, but what else is there? And I think the focus on the additional IT security is becoming more of the norm in a day-to-day business, has helped our clients be more comfortable with what that risk is, better understand the risk transfer opportunities, but also taking that risk management approach to say, let's do what we can to avoid this on the front end so that we don't have to deal with the insurance claims.
Go ahead and wrap up, because you're a wealth of information, and obviously we can dive in much deeper, but where does everyone go to carry this conversation forward? So website, email, phone number, where do we go?
Sure. So higginbotham.com is our corporate website. My phone number is 405-406-6145, and email address is gholden@higginbotham.net or .com, and all of those can reach me.
Makes it very easy to find you and reach you for sure. So Gray, thank you as always for coming on the show, being a wealth of information. Greatly appreciate it. Thank you for being a part of the show.
My pleasure. Thanks for having me.